Dirty dealings, corporate battles, consumer woes. This is Evening 5. Malaysian Resources Corp is partnering Ipoh Sentral to jointly develop the Ipoh Sentral project with an estimated GDV of 6.25 billion ringgit. ISSB, a JV between Railway Assets Corp's subsidiary Railway Assets Holding and Silver Smart, owned by the Perak State Secretary Inc., operates under a 50-50 shareholding structure. The collaboration was formalized via the signing of a memorandum of agreement on Thursday for a transit-oriented development project on land owned by RAC. MRCB said that the proposed development will not only be a modern transportation hub connecting various modes of transportation, but will also upgrade the quality of the life of the people. This confirms the Edge's report on Tuesday that MRCB has secured the bid for the Ipoh Railway Station Integrated Development Plan. The TOD project will transform the area behind the Ipoh Railway Station into Ipoh Sentral, incorporating affordable housing, commercial spaces, a hotel, green areas, and educational institutions. MRCB is also redeveloping KL Sentral, reported to cost over R1 billion to be borne by MRCB under the Public-Private Partnership Unit under the Prime Minister's Department. MRCB was the master developer of KL Sentral, Malaysia's largest transit hub, comprising over 72 acres. Oriental Kopi holdings surged more than 70% during its trading debut on Thursday, opening at 75 cent versus its issue price of 44 cent. The stock climbed as high as 91.5 cent with 578.72 million shares changing hands. It ended the day at 87.5 cent. Managing Director Datuk Kelvin Chan said that the funds raised from the listing will provide the group much-needed resources to significantly increase its operational efficiency, bringing its headquarters, central kitchen and warehouse under one roof. Analysts covering Oriental Kopi all assigned a buy call on the counter, projecting strong earnings growth to be driven by its rapid store expansion and fast-moving consumer goods. Chan said that Oriental Kopi is targeting to launch over 20 products by year-end. It currently offers around 31 products, including white coffee, sambal, pies and tarts. Sales of FMCG via in-store and retail channels surged over threefold in FY 2024, contributing 17% of Oriental Kopi's total revenue. The High Court allowed the forfeiture of Ricky Wong Shikai's luxury condominium unit at Four Seasons Place in Kuala Lumpur, as well as 445,039.28 ringgit in the businessman's personal fixed deposit account. The property is owned by Havana Bayview, where Wong is a director and substantial shareholder. The Securities Commission conducted the forfeiture application on behalf of the public prosecutor, the regulator said. Judge Dato' Azhar Abdul Hamid delivered the decision on January 22nd, but granted Havana and Wong a stay of execution on the decision pending a formal stay application. Wong has been absent from the country since 2019, and the SC has launched a manhunt for the ex-CEO of Asia Media Group, now known as MMM Group. His lawyers have denied that he's a fugitive. The forfeiture application filed by the SC was related to proceeds raised by Bright Packaging Industry through a series of corporate exercises between 2013 and 2014. Investigation by the SC revealed that 56.07 million were allegedly siphoned from Bright Packaging, of which a portion was used as part payment for the purchase of the condominium, and interest generated from part of the proceeds were also placed into Wong's fixed deposit account. In the past, the SC has initiated other enforcement actions against Wong, including a civil suit in May 2020 against Wong, his mother, Tay Siu Wan, and Wong SK Holdings, accusing him of securities fraud under Section 179 of the Capital Markets and Services Act 2007. Westports Holdings reported a record high net profit of 256.7 million for its fourth quarter, a 25% year-on-year increase driven by higher container revenue. Quarterly revenue grew 22% to 675.4 million compared to 554.1 million previously. Westports declared a dividend of 10.86 cents per share, bringing the full-year payout to a record high 19.75 cents per share. For FY 2024, earnings rose rose 15% year-on-year to 898 million from 779.4 million last year. Revenue increased 9% year-on-year to 2.34 billion ringgit. Westports handled a record 10.98 million TEUs of containers in 2024, including a new high of 4.91 million TEUs in import-export container volume, which supports domestic economic activities. On a monthly basis, the group also achieved a record 1.01 million TEUs handled in December. Looking ahead, the group expects intra-Asia to remain its primary container volume contributor, but forecasts low single-digit container volume growth for the next financial period. Separately, Westports announced a slew of boardroom changes, including the redesignation of Datuk Ruben Emir Nanalingam as Executive Chairman and the appointment of Lee Muntat as Group Managing Director. Lee is currently the CEO of wholly owned subsidiary Westports Malaysia and has served as acting CFO of Westports since January 2020. The Securities Commission has issued a statement to give assurance that it is closely monitoring recent takeover activities in the Malaysian market to ensure compliance with relevant regulations and to safeguard the integrity of the capital market, citing recent interests in such matters. While the statement did not make reference to any specific cases, it comes amid significant public interest and scrutiny in the takeover of Malaysia Airports Holdings. In its statement, SC said that it is entrusted with ensuring all transactions within its jurisdiction comply with the rules and regulations, including the Malaysian Code on Takeovers and Mergers and the rules on takeovers, mergers and compulsory acquisitions. To recap, the Gateway Development Alliance, a consortium led by Khazanah Nasional, along with the Employees Provident Fund, Abu Dhabi Investment Authority and Global Infrastructure Partners, are looking to take MHB private at 11 ringgit per share. On Wednesday, GDA had issued a separate statement to refute any suggestion that the privatization effort had been undertaken in anything other than full compliance with the SC's rules. The consortium clarified that the latest revision of the acceptance condition to at least 85% from 90% previously was lawfully permitted pursuant to Note 7 to paragraph 6.01 of the SC's rules. The revision came as the consortium had only secured acceptance of 86.51% following several extensions.